Hi, this is Tony Sagami. Hey, there's been some pretty impressive developments going on in China this last week. I'll give you a few examples. General Motors and Mercedes both reported that their March sale of autos were improved quite a bit in March. That type of increased sales is kind of a surprise and a reversal. So maybe things are, at least in the auto business, seem to be bottoming out a little bit. Also, the Chinese Purchaser Manager Index, the PMI, we hear a lot about that in the U.S. For the first time since September, that PMI index has been above 50, and 50 is a signal of expansion. So that's a pretty important move, too. One of the things that really caught my attention was a report from the World Bank. Now, the World Bank has been pretty negative on the global economy and very harsh on the U.S. and Europe. And they're the ones that have reduced their growth expectations for China also. But they recently came out, just yesterday, and said that they think that China, they called it the lone ray of hope among the global economies. And they now are saying that Eastern Asia, Singapore, Taiwan, South Korea, China, they expect that region to grow by 5.3% this year. And they expect that it even to get better next year in 2010. So the World Bank has been pretty pessimistic, but they now are starting to talk about bottoming and improvement in China also. And China is important not so much because there's a lot of stocks that are interesting and exciting, because it is the driver for the rest of Asia. Asia has been getting a lot of its growth and business from China, so that's really the key component to Asian growth. And that's still where you want to be keeping most of your money. I think the biggest mistake you can make going forward is to keep your equity dollars primarily in the U.S., where the economy is contracting and getting worse and worse by the week. Things are getting better. The stock market's had a little run, but the economy is still sick and ugly. Now converse that to what's going on in Asia. Those economies are still growing. They're not growing at the double-digit pace they were, but at least they have positive growth. And I tell you, if we were doing 5, 6, 7% growth here in the U.S., we'd be doing cartwheels. So as all the time I've been suggesting in these videos, is the key place to keep your equity dollars is not in North America, it's in Asia where the big growth is. You want to hitch your train to your wagon to the cars that are going 200 miles an hour, not the ones that are in the dead stop, which explains what the U.S. is. This is Tony Sagami. Until we talk next week. Bye.